Good morning, everyone. Today is the 5th of December. It is a Thursday, and we are literally only about 20 days from Christmas. Can't believe it. Okay, today is a unique kind of a setup in the markets. We're looking at a flat down pattern in the SPY cycle patterns after yesterday's top. Seeing a big rally yesterday in the markets, particularly in the QQQs. We're moving into this kind of an exhaustion pattern, which is a flat down harami inside and carryover, which means the next couple days could be rather neutral, possibly sliding to the downside. Then we move into this bearish exhaustion, which means that I think we're going to be moving into a rollover downward move here, flat down, and then a breakaway, and then a carryover and counter trend mode. We really don't get into what I think is real bullish mode here until near the end of the year. So I think we could be looking at a moderate rollover. If I think, the easiest way to explain this is kind of like this. And I'm going to spend some time this next week showing you what is possible. But, 590 and down to 580 is not impossible at this level. That's only a moderate 2 or 3% move. And if you take a look over here at the SPY, you've seen we've got this very nice rally to the upside, nice big gap yesterday. This is daily. I'll get rid of some of these so you can see. We are looking here at a fairly solid kind of a gapping move here, and it is getting to the point where we are slightly overbought, which is why this rolling trend right now, and what I'm really watching are the sectors here. We had a big breakdown in energy yesterday, which is not uncommon, especially with Trump promoting energy independence. But a big breakdown in energy is one of the key elements of the anomaly event. You have energy, you have financials, you have metals, and you have generally consumer. So the crash index has already started to move downward. Okay. And now we'll take a look over here at IYT, which is transports, and transports have already started to move down as well. So we're getting into that mode where, and again, this is something we want to pay attention to, is weekly transportation. If we move into this downward cycle trend like this, we're getting and weaker forward expectations related to the economy. So again, here we have the August, September lows of 2024. Here's the election. This is again weekly. Actually, there's the election, shot up, and would not be surprised, ladies and gentlemen, to see this move from the election mode here back down into something like this. And that would be the anomaly event setting up, which you can see kind of taking place right here. Look at this weekly. If we were to close out and take a look at where this is rolling, we've got a pretty good rolling topping formation here that could be the start of my anomaly event moving down into this area by Christmas. So understand that we're moving into a very unusual mode, particularly it seems it is being led right now by energy and transports. Okay. So we're getting energy moving downward and we're getting transports moving downward. Really watching for this to unwind. Now, basic materials have moved down slightly, but we have yet to see that real breakdown. So remember, we were looking for a fairly moderate breakdown in all of these sectors which didn't really happen after the election. So now, if we're gonna see any time, look at this XLY, wow, consumer discretionary. If we're gonna see any real rolling of this setup, we're gonna see it rolling to the downside over the next 3, 4, 5 weeks, in my opinion. Yeah, otherwise, I think we're going to move into 2025 and see a pretty solid rally. So let's go back over the data and let's see where we're at. So we're looking at a flat down pattern today in trending mode. I think we're going to be looking at a kind of a rolling. Yeah, this is it. Nope, here. We're going to be looking at kind of a rolling topping formation. So I've highlighted it right here. Flat down mode. Remember, we had our topping pattern yesterday, and a topping pattern just rolled straight up. So the topping pattern may be rolling into today, moving downward slightly in the flat down pattern. Then tomorrow we have the Harami inside pattern, which would indicate that we're going to stay within today's range. Whatever happens today, we're going to see price stay within that range. So we could have a flat down pattern kind of like this, and get some sort of a moderate move to the upside and sideways into Friday. Not expecting anything major. Same thing with the QQQ here. I'll go to the QQQ. I am expecting again a moderate rolling trend here to the downside. This is an hourly chart, so we're going to be looking at, we had our topping pattern yesterday, and we are going to be looking at a moderate roll to the downside today, possibly coming down and trying to fill this gap window here. And then we are looking at a Harami pattern tomorrow, staying rather flat in the sideways range that we set up today. So this is a little too long. You got this rolling downward trend, and then tomorrow we have this sideways pattern setting up right over here, staying in this sideways range within today's potential trading range. So we're looking at kind of a pullback, consolidation, maybe a bit of a topping pattern, because like I said, I think we're moving into this exhaustion, flat down breakaway. To me, this seems like a downward cycle mode. So we will see how it plays out. In the meantime, we just kind of let it go. Okay, gold and silver are moving into a topping pattern. Now, gold and silver had moved upward as of yesterday. Remember, we had flagged out over here. I was expecting kind of an upward move. We did get a little bit of an upward move, but nothing up to my 720 area, which I thought would be next. Silver, although, has rallied above this flagging high. So this is an inverted excess phase peak pattern. This is our flag coming back down. Silver has rallied above the flagging high. Silver is giving us an indication that we are now moving up into the consolidation phase. I believe the consolidation phase is going to be much higher. I believe the consolidation phase is going to be up in this 33 area. Get rid of this from earlier. So I think we're going to be moving up into the $33 area for silver, and then moving into consolidation, and then eventually up into the 35 to 37 area. So that gives you an idea where we're at in that move. Gold, on the other hand, needs to get above this level here. So gold is struggling at this 2690 area. First, we have to get above this 2690, then 2720. And as of right now, we're just not doing it. So the move in silver to the upside is actually very positive. Okay. It is leading gold a little bit right now, where gold is consolidating, and the move in silver gives us a pretty good indication that we are going to see some upward trending. This is actually breaking to a new high, confirming in Fibonacci price theory, blowing across this previous high. Now the next stage would be to try to move above this level. And this level. And then eventually this level. And then higher. So silver looks like, if we can keep this momentum, I think we're going to be up in the 33 to 33.25 area. Gold, on the other hand, must try to break above this 26.90. So this 26.90 area here is really acting as some resistance for gold. And then after that, we're going to get to the 27.20 area, which will be the next resistance area for gold. Now, if we can break above 26.90, which should be moving across this high level here and this high level back here, I think we're cleared up to this 27.60 area, but we've got to get above this 26.90 area. Otherwise, we're going to be trapped in this lower range, and we could get some fairly extreme volatility. So again, gold looking good primarily because silver's already making a move. Okay, silver getting above this flag high here. You can see how critical this is. Here's the flag high for gold. This is really the most important level right now. That is our flag high. That is our unique high. And technically, that is an ultimate high because we have so much time on this hourly chart before we actually break above it. We go all the way back to here before we get a breach of that price level. So again, this becomes a very critical level. This becomes a secondary level. This is what we would call a unique high. This is an ultimate high. This is again this was a unique, possibly ultimate high, but this is right now a new ultimate high right here. And why is it an ultimate? Because it hasn't been touched by price in the last 45 to 75 bars. And we go back a long way for this to actually be touched. So this is our ultimate high. In reality, our true ultimate high is way up here. That's the true ultimate high. I mean, this is the highest high we've seen in the last 30, 60 days. Okay, and our lowest low would be way down over here somewhere. But currently, this is our lowest low. That's going to be our ultimate low level right here, and we're playing in this middle range. So this is basically us playing this middle range of the chart. Same thing here. We're playing this middle range of the chart. We've got this ultimate low down here. Make that red. And we've got the ultimate high right up here. And we're kind of stuck in that range. So we're really looking for kind of a breakout move today. And what we have in the gold cycle pattern is a topping pattern and then a reversal rally and counter trend. Then we have an inside breakaway, Harami, and then a crush pattern, and then a bottom, and then moving into a couple of blank bars here on the 16th, 17th. I really believe that we're going to be looking at a moderate move to the upside in gold and silver, kind of like this, and then up. And I think we're going to be looking at the same thing here, up and then up and then up. I really do believe that gold and silver are going to recover back to highs simply because of the fear and hedge that's going on in the global market. Okay, we're going to go to Bitcoin lastly. Bitcoin is at 103. Look at that. Really rallied like a nut. And again, folks, this is a massive move. Let me come back over here to daily. Try to settle this in. Get rid of this. Oops. And look at this move. Big rally yesterday. It's talking about how we were either going to break down or break up. and we had flagged into this mode, kind of moved down, talked about that yesterday morning. Look what happened yesterday. We rolled all the way up in a very strong move, and then overnight really just took off. So this downward move here, just like what happened in the SPY and the QQQ, is no longer valid. This move is not going to happen now that we've established this new high. We're not going down to 82. We're not going down to 72. We're not going down to 62. We are now up in this upper range. We are pushing upward through this flag. You can see this flagging will likely continue. And then again, here's our flag. Let's see if I can get rid of the right one here. There we go. And this flag will likely, this flag will likely continue to the upside. But this is how Fibonacci price theory and excess phase peak patterns work. They're very simple. You move into this flagging formation. This flagging was bullish until we broke downward and started to try to take this out. We rolled back up to the upside. We're now bullish. Why? Because we've taken this out. We're very solidly bullish. We don't have any issues with a downturn yet. We're in a solid bullish trend, and we could continue to move higher. So I'm going to get rid of some of these labels so we can see what we're doing here. We don't longer have that. We no longer have that. That's okay. Okay, so these were just leftover labels. And you can see how we're rolling very solidly to the upside. So the way I would look at it now, folks, is, we have legging, and I think I'd done this for you guys earlier, but it basically boils down to an appropriate leg here would be about from here to here. So, and I've shown you this before, how you get into the same type of a leg. Actually here, a little higher, but you get in the same type of a leg, and now we would be looking at the same type of a leg from this low or approximately this low. That puts us pretty much right in this level or that level, which we've already breached. So that puts us right at 102,358 or up to 106,500. Very interesting to see how this is going to play out and roll. So we will see how Bitcoin wants to proceed. Obviously, this is a good solid rally. I mean, this is going to make a lot of Bitcoiners happy getting back above 100,000, which we kind of fell short of right over here, 99,800 roughly. So we just stalled below 100 grand. Now we're above it. You're going to be seeing Bitcoiners everywhere posting their laser eyes and their memes, and it's going to be an interesting day. Okay, guys, that's it for now. Remember, get some and pay attention to these sectors. Okay, really pay attention to the spider sectors here for a potential breakdown. I mean, it is very. We've had a good solid rally post election. You can see it. We're really quite overbought. You can see the election. Here's basically the election, the day of, the day after, and then the gap. And there it is. We've had this big rally. And even if we were to roll back down into this 582, 88 area, it's not unimaginable to see that kind of a move. It really isn't. And that is about a 3.5% downside move. So just be aware that we're accelerated, we're exuberant, we're seeing a post-election rally, but watching the transportation IYT roll downward, watching energy roll downward. You're getting a feel here that we're starting to unwind some of this exuberance and we're starting to get the crash index moving downward, fairly strongly. If we get down below this 74 level, we could see kind of a really solid breakdown in trend, maybe back down into this area. So be aware, folks. We might be looking at a bit of a rollover in trend right now. Okay, guys, that's it. Let's see how things play out today. Remember, liquidity is going to stay fairly quiet over the next couple of weeks. Okay, we're not going to have a lot of heavy liquidity, so you might want to consider cutting your trading sizes down, like I've been suggesting. We're not quite in that heavy market liquidity mode. In fact, I saw a post the other day that I think it was yesterday or the day before, the S&P put in the lowest volume day since like I can't remember if it was 97 or something like that. It was a long time ago. Very low liquidity, which is why we're getting some of these bigger moves like this. It's not necessarily that the SPY is taking off like this. It's just that we're getting a lot of low liquidity. Low liquidity means not too many players on the field today. And when you have, remember the flash crash, that was a low liquidity type of move. When you get into not so many traders active, it creates a low liquidity mode in the market. You get much bigger volatility typically in prices. So we'll see how it holds up. Okay, guys, that's it for now. Talk to you later.